The Nightly Business Report.
Good evening. Tonight, notwithstanding worries about the car import business, the Ministry of Trade has denied reports of a drop in demand for imported automobiles and stated confidence in reaching tax revenue goals. The Ceylon Electricity Board reported a gross loss for the March 2025 quarter due to recent tariff cuts, with the IMF urging cost-reflective pricing before the next support package installment. The SPI was up 0.11% to 16,397.68 and the S&P SL20 was up 0.30% to 4,835.04 as the Colombo Stock Market entered the day with slight gains. And as worries about slowing global growth were heightened by a fall in the US credit rating and conflicting economic statistics from China, the majority of Asian markets slumped today. Good evening and thank you for joining us. The Ministry of Trade has dismissed claims of declining demand for imported vehicles, expressing confidence in meeting tax revenue targets despite concerns over the vehicle import market.
The Ministry of Trade, Commerce, Food Security and Cooperative Development has dismissed claims of weak demand for imported vehicles. Minister Secretary K. Vimalthiraja stated that speculation about suppressed vehicle demand was baseless. He cited the volume of letters of credit opened by banks in the past 3 months as indication of steady demand. Vimalthiraja also expressed confidence in achieving government's tax revenue targets for vehicle imports. He noted that Sri Lanka had already made substantial progress in tax collection. Meanwhile, Department of Motor and Investment Policy's Director General M.K. Pradeep Kumar stated that there were no plans to revise the vehicle import tax revenue target. The government is aiming to collect between 350 to 400 billion rupees from vehicle import taxes despite public concerns over high tariffs.
Sri Lanka has continued its salt import ban following requests from local salt producer associations. Trade Minister Vasantha Samarasinghe has said the initial import of 12,500 tonnes was halted after producers urged the government not to bring in more. Despite early plans to import industrial salt due to expected rain-related production disruptions, domestic output has remained below expectations. Hambantota Lanka salt, which anticipated a 100,000 tonne harvest, now expects only 60,000 tonnes. To address the shortfall, 30,000 metric tonnes of industrial salt will be imported through the Industries Ministry. Around 40,000 to 50,000 tonnes are expected to arrive by June 10th, with the first 100 containers set to reach Sri Lanka by Wednesday. The Ceylon Electricity Board posted a gross loss for the March 2025 quarter as revenue dropped sharply following recent tariff cuts. The losses have renewed IMF calls for cost-reflective electricity pricing ahead of the next tranche of its support package.
The Ceylon Electricity Board reported a net loss of 17.46 billion rupees for the January to March 2025 quarter compared to a profit of 86.50 billion rupees a year earlier. Revenues plunged 45.5% to 97.92 billion rupees while the cost of sales rose slightly to 112.93 billion rupees, resulting in a gross loss of 15.02 billion rupees. The losses come in the wake of 20% tariff reduction implemented in January this year. The IMF, following the fourth review under the Extended Fund Facility, reiterated that Sri Lanka has yet to meet the structural benchmark on cost recovery electricity pricing. Delays in meeting this benchmark could stall the next $344 million tranche of IMF support. In response, the CEB has proposed an 18.3% tariff hike for June to December this year to address an estimated 42.19 billion rupees deficit. The proposal is now subject to a public consultation process before a final decision is made.
The Ceylon Chamber of Commerce recently hosted an interactive session with Sri Lanka's newly appointed heads of mission to key global destinations. The event brought together ambassadors designate to Japan, Cuba, India, Pakistan, the UAE, the UK and the UN, along with private sector representatives. It provided an opportunity for the local business community to engage directly with Sri Lanka's outgoing ambassadors and high commissioners. Discussions focused on trade, investment, tourism, promotion, and strengthening economic ties between Sri Lanka and these nations. Participants exchange insights on market opportunities, challenges, and how to better represent Sri Lankan businesses abroad. The Chamber wished for the heads of mission success in their upcoming diplomatic roles. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Colombo Stock Market closed with modest gains today as the SPI rose by 18.29 points to 16,397.68, up 0.11%. The S&P SL20 saw a larger increase of 14.37 points or 0.30%, closing at 4,835.04. A total of 91.4 million shares were traded with a turnover of approximately 2.61 billion rupees. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Prashansa. Continuing the bullish momentum from the previous week, the Colombo Stock Exchange began the week on a strong note. The all-share price index surged by nearly 80 points in the early hours of trading but experienced sideways movement later in the day due to increased selling pressure. However, the index managed to recover by market close, ending in positive territory at 16,898 with a modest gain of 18 points as well. Positive contributors from key players in the banking sector such as HMB Bank, Ceylon Bank and Commercial Bank, along with John Keel's Holdings and CT Holdings, helped support the market's upward momentum. Today's session also saw comparatively low participation from both retail and high net worth investors. In terms of turnover, today's figure dropped to 2.6 billion rupees from previous close high of 3.1 billion rupees as well. However, this is still well above the monthly average turnover, which stands at 2.3 billion rupees as well. In terms of sector-wise contribution to overall turnover, the banking sector took the lead with a share of 46%. This was followed by the capital goods sector and the diversified financial sector, which produced a joint contribution of 25% as well. Thank you.
Colombo stock market is expected to remain volatile this week, influenced by global trade uncertainties and domestic policy updates. Investors will closely monitor developments in US tariff negotiations and corporate earning reports, which could impact market sentiment. For further insights, we speak with Akna Tennakorn from First Capital Holdings.
Thank you, Prasansa. The Colombo Stock Exchange is expected to emulate the atmosphere that was evident in today's session during the upcoming week. This means that it is quite likely for the market to remain visibly volatile while retaining the positive momentum that was evident across the last few trading sessions. One prominent reason for this expected volatility is the release of quarterly results of March-ending companies. The market would invariably react to these announcements, triggering bouts of volatility. Another reason is the uncertainty surrounding an impending increase in electricity tariffs. But despite potential volatility, the market is likely to retain the positivity that we have seen in the last couple of days. Turnover would also remain elevated with greater participation expected from both retail and high net worth investors. Finally, the banking sector, diversified conglomerates, diversified financials, and entities within the construction sector are expected to showcase elevated levels of activity during the week. Thank you.
Gold prices climbed today, supported by renewed safe haven demand after Moody's downgraded the US credit rating, citing concerns over fiscal health. The downgrade triggered a wave of risk aversion across global markets. The downgrade triggered a wave of risk aversion across global markets. Spot gold rose 0.5% to $3,217.49 an ounce, while June gold futures gained 1% to $3,220.17 per ounce. The precious metal also benefited from mixed economic data out of China, which underscored the total of ongoing trade tensions with the US on consumer and business sentiment. Gold rebounded after posting losses last week, when optimism over a potential de-escalation in US-China trade tariffs fueled a risk-on rally and dampened demand for safe haven assets. Oil prices slipped in Asian trade today after a week of gains as concerns about oversupply persisted amid ongoing US-Iran nuclear talks. Investors also weighed Chinese factory data, which showed resilience despite the impact of US tariffs. Brent crude futures for June declined 0.3% to $65.20 per barrel, while West Texas Intermediate crude futures fell 0.3% to $61.77 per barrel. Both contracts had gained more than 1% last week, driven by optimism surrounding a temporary reduction in tariffs between the US and China. Sri Lankan rupee depreciates against US dollar, weakens against global currencies. The Sri Lankan rupee has experienced a slight depreciation against the US dollar today compared to last Friday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have increased. Additionally, the rupee has weakened against a broad range of foreign currencies, including those from the Gulf region. Let's take a closer look at how the rupee is performing against major global currencies. A short break now. This is the Nightly Business Report. Welcome back. Sunpec marked a major milestone in Sri Lanka by hosting its first Clean Sri Lanka at the renovated Navala fuel station. The initiative supports the government's national cleanliness drive by introducing upgraded facilities and environmental friendly services across its fuel station network. Sunpec hosted its first Clean Sri Lanka Open Day today at the newly renovated Navala fuel station. The event marked a key milestone in Sunpec's operations in Sri Lanka, aligning with the government's Clean Sri Lanka initiative. The company pledged to offer clean restroom facilities and enhanced services across its island-wide fuel station network. The ceremony was attended by Prime Minister Engineer Kantana Wijesekara, Chinese Ambassador Ki Zhen Hong and other senior officials. Attendees were introduced to Sunpec's advanced safety and environmental technologies, including emergency shut-off systems and vapor recovery valves. Sunpec also announced ongoing state training programs to improve customer service and safety. The company reaffirmed its long-term commitment to creating a cleaner, more sustainable fuel retail environment in Sri Lanka. HMAS Holdings plc has appointed Ashish Chandra as its new Group Chief Executive Officer, effective 1st July 2025. This marks a strategic turning point as HMAS aims to accelerate growth in emerging markets, expand into new sectors, and embrace technology-led transformation. Ashish brings over 27 years of leadership experience across telecom, digital, and retail sectors in highly competitive markets. Most recently, he served as CEO and Managing Director of Airtel Sri Lanka, where he led major investments and landmark industry merger. He also held senior roles at Vodafone and Reliance Communications in India. HMAS Chairman Hussein Espuli expressed confidence in Ashish's ability to lead the group into its next phase of growth and innovation. Haley Solar and Merkantile Investments have signed an MOU to collaborate on making solar power more accessible and affordable across Sri Lanka. Haley's Solar, the renewable energy division of Haley's Fentons Limited, has partnered with Merkantile Investments and Finance plc through a Memorandum of Understanding. This collaboration aims to make solar power more accessible and affordable to customers across Sri Lanka. The two companies will leverage their combined resources, expertise and networks to provide long-lasting and cost-effective solar solutions. These solutions will cater to both residential and commercial customers. By joining forces, the partners hope to accelerate the adoption of solar energy in the country. The partnership will also focus on delivering sustainable energy options to meet growing demand. Together, Haley Solar and Merkantile Investments aim to contribute to Sri Lanka's renewable energy goals. The move aligns with the nation's drive to reduce dependency on non-renewable energy sources. It also supports global sustainability efforts by prompting cleaner, greener alternatives. Standard Chartered Sri Lanka has appointed Clement Isac as Director, Head of Markets and Sales. In this new role, Clement will lead the development and implementation of the bank's strategy and growth initiatives for markets and sales in Sri Lanka. With over 30 years of experience in risk management, solutions and banking operations, Clement has spent 27 years in financial markets and sales across the GCC region. With over 30 years of experience in risk management solutions and banking operations, Clement has spent 27 years in financial markets and sales across the GCC region. Prior to joining Standard Chartered, he held senior leadership roles at institutions like First Abu Dhabi Bank, Deutsche Bank, Barclays, and HSBC. Clement's expertise spans financial markets, corporate treasury and client strategies, and he holds a certified treasury professional designation. CEO Binguma Thevathantri welcomed Clement's appointment, noting that his experience will strengthen the bank's position and drive growth in the markets and sales division. The Commercial Bank of Ceylon has won the Best Cross-Border Salience Large and Mid-Market Award at the Visa Commercial Solutions Excellence Awards 2025, presented at the Visa Leadership Conclave in Colombo. Commercial Bank of Ceylon has won the Best Cross-Border Salience Large and Mid-Market Award at the Visa Commercial Solutions Excellence Awards 2025. This recognition highlights the bank's leadership in helping Sri Lankan businesses conduct seamless, secure, cross-border transactions. Over the past year, the bank has rolled out advanced commercial card solutions that offer real-time FX visibility, dynamic spending controls and automated reconciliation. These features have contributed to significant growth in outbound and inbound Visa transactions among large and mid-market customers. Commercial Bank's Assistant General Manager Kapila Liyanage credited the success to their strategy of combining Visa's global network and the bank's robust digital infrastructure. Visa's country manager for Sri Lanka and Maldives, Avanti Colombagi, praised the bank's commitment to innovation and client-centric solutions. Millennium Mighty ESP has reaffirmed its leadership in digital transformation by serving as the exclusive strategic partner for the APICTA Executive Committee meeting 2025. The meeting at the Hilton Colombo gathered 12 ICT leaders from 17 Asia-Pacific economies. APICTA, an association of ICT communities across the region, works to promote innovation and indigenous ICT solutions. Hosted by FITES and BCS Sri Lanka, the event focused on collaboration and policy alignment, supporting Sri Lanka's ambition to become a leading ICT hub. Millennium Mighty ESP's involvement highlights its commitment to driving digital transformation regionally, with a growing presence across ASEAN and beyond. The company continues to provide enterprise solutions across various sectors, including telecommunications, banking, healthcare, and more. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian markets fell today as a US credit rating downgraded and mixed economic data from China's stock concerns over slowing global growth. China's Shanghai Shenzhen CSI 300 and Shanghai Composite Indexes slipped 0.4% and 0.1% respectively. Losses were partially trimmed after data showed stronger than expected industrial production in April, despite pressure from high US tariffs. Japan's Nikkei 2025 and Topics declined 0.3% and 0.1%, extending losses following last week's weak GDP data. Investors now await April inflation figures, which could influence future Bank of Japan rate decisions. South Korea's Kospi lost 0.7%, Singapore's Straits Times fell 0.3%, and Australia's ASX 200 remained flat ahead of a key